session as quickly as possible. Thank you. Thank you for joining us back after that short tea and coffee break that we've just had. And with that, we shall now begin with our next panel, which is on our bank's VUCA ready. That's volatility, uncertainty, complexity, and ambiguity ready. And to address this, we have with us Mr. Mallikarjun Rao, the General Manager IT, Oriental Bank of Commerce. Can we give him a round of applause and welcome Mr. Rao on stage? Also joining us on the session, we have with us Mr. Agnelo D'Souza, who's the CISO, Kotak Mahindra Bank. Let's give him a round of applause and welcome him on stage. Mr. Asim Parashar, Director, Management Consulting, KPMG. Let's welcome him with a round of applause. And our session chairperson, Mr. Patrick Kishore, COO, Institute for Development and Research in Banking Technology. Thank you very much, gentlemen, for joining us. And on that note, I'm now going to hand over the proceedings to Mr. Kishore.
I'm becoming a serial panelist. This evening's subject again is a very, very new subject. Something that's quite different from what we've been dealing since morning. And this is not only technology, though I will bring technology into it. VUCA. How many of you have heard this before? This expression? Last year the buzzword was smack. Right? So this year's 2015 buzzword seems to be VUCA. Okay. So we are on the verge of very exciting times. VUCA stands for volatility, uncertainty, complexity, and ambiguity. All right? Now, there's a lot of T's in that. So, this word, or this concept of these 5 parameters or 5 ideas, basically they are a military term. This term is very much a 21st century term. And it was coined basically during in the environment of low intensity conflict. Things like civil unrest, bombings, terrorism, not out and out war across boundaries, but low intensity conflict within the country and across the countries. And therefore the militaries of the world needed to find ways of dealing with this thing. And was it Lao Tse who said all business is war? Right? So whatever applies to an army environment also applies to business. So the management consultants brought this term into the business area also. Actually, I should not be sitting here. Asim should be sitting here because he's the management consultant. But I hope to get more out of him than I can give to you. Right? So, we do live actually in very uncertain terms. If you see, nobody thought that oil will come down to $45 a barrel. Nobody thought that food prices would go up like this. Nobody thought that the government will change. Everybody thought Achhe Din will come. Nobody thought that for the last 2-3 years, no major greenfield project has taken off. But today we are on the edge of, hopefully, a major change in the economy. But then we don't know what. So this entire VUCA has to do with unknown unknowns. All right? So if you see, when this kind of things happen, how do businesses react? In particular, we'll come back to banking again. How do bankings react? Because your entire economy is very closely tied to banking. No banks, no economy. If the banks stop for working for a day, the economy stops for that day. On top of that, we have this complexity issue. We have highly interconnected systems. Take the telecom networks. One network goes down, it will have a domino effect on the other telecom networks also. One system fails. If there's a glitch in a stock trading application, it can stop the stock exchange, but also the payment systems. So we live in a highly interconnected world, very, very complex world, and therefore managing that complexity itself has become a challenge. We are also in times when there's a lot of ambiguity. We don't know enough about a lot of issues. In banking, we have these good intentions of financial inclusion and so on, but not many of us really have a clue how to fix that. So I'm going to start with Asim. Asim, in this kind of a very, very uncertain or vague, I think that one word describes all the four factors, this kind of a vague environment, what should banks be doing? In particular, what should bank leaders be doing?
Okay, that's a googly, but let me try to answer that part of it. When we look at the banking system, and traditionally it was deposits and lending, and that used to be the traditional way of doing banking. But in the last 2 decades, the complexity have increased. The kind of products, the structured products which has come in, the focus on treasury-based income that has increased, globalization have come in. You have corporate customers which have multi-country footprint. So the complexity, when you look at it, either from the deposits or from lending side of it, that has increased tremendously. But whether the credit appraisal process or the credit management process, have it remained at pace with the change in the banking business? There are questions on that. And I will just give you an example. I was in UK for 4 years during this last recession from 2007 to 2010-11. And every weekend it used to be a betting going on in the business district out there in Canary Wharf that which bank will go down. And it was such an uncertain environment. Reasons unknown. Where are the bets or where are the trades which has happened? Unknown. People are still trying to think through it. Bear Stearns went down. Lehman Brothers went down. Credit Suisse, UBS, everybody was under tremendous pressure. And nobody has a clue. And recently, if you have followed the banking area, there has been a report published for all the transactions and discussions that have gone between Bank of England, directors, governors, as well as the various bank CEO. And when you look through the script of it, you will find that all the senior bankers having 25, 30 years of experience of doing banking in different portfolio, different line of business, they all were confused. It was completely vague. They were also trying to figure out what they should do to minimize the risk. So under this situation, to summarize that how should the bank look at this complexity and volatility is all your processes. Keep it simple. Keep it customer centric. The more you are closer to your customer, whether it is a retail customer or your corporate customer, you should be the first to sense what's happening in the market. For example, coal block licenses got cancelled. None of the banks had a clue. Nobody had expected that. And then they were running helter-skelter, going to Ministry of Finance, do not cancel or try to find a way out of it. Similarly, telecom licenses, 2G spectrum auction, 3G. Nobody has a clue, and you have been lending. Airline business, you have been lending. So the point which comes out in all these things, we put blame on agriculture loans or retail loans, etc. But that is not impacting the balance sheet, especially in the Indian market. It is the corporate loan that is having a large impact on the balance sheet of all these banks. And this ambiguity, this uncertainty, either the banks are not well prepared, they are not aware of the events that are happening in the market, they are not doing the processes are there, that every quarter you need to do a validation of your corporate customer, how viable it is it a going concern, etc. But is it being followed in principle? There are challenges on that. Systems have been implemented, technology has been brought in, but as long as the leadership doesn't drive this direction in their banking business, rather than putting pressure in each of the branch manager to increase the deposits or increase the loan, then these all conflict will keep coming in and we will keep dabbling with new terminology, which sometime we consultant bring into the banking lexicon. Thank you.
Thank you. Yeah, that's true. Now, you mentioned a very important thing of risk in a credit decision. Typically, banks manage their risk on the 3 pillars, right? So, market risk, credit risk. What Asim just mentioned is the credit risk. When you lend to a large corporate, a big ticket loan, you do a risk assessment. You do look for what can go wrong, but you don't factor in cancellation of licenses because that's at the very basis of the loan, right? So, from a risk management perspective, how would a manager or how would a leader, a lender, deal with this kind of an environment?
Good afternoon to everybody. Before I come to the risk, I would like to just give a little background what Mr. Asim has said. I would like to continue on that. The concept of VUCA, as rightly said, it has taken more momentum since 2008 across all the countries, and our country is no exception for that. More importantly, when a country like ours has sensitivity with respect to geography, geographically we are sensitive, politically also we are sensitive. Because of these reasons, unless we understand the volatility, even uncertainty, complexity, and ambiguity, the business continuity will be impacted. Now, business continuity, when we look at from the information technology angle, we only understand to the extent of internal failure rather than external threat. So, to that extent, we have insulated ourselves over a period of time to clearly declare that yes, we have a very good BCP policy. How far it is sustainable, how far it would remain with respect to the VUCA impact in our country is still to be seen, which is a very challenging task for the leadership. Now coming to risk management. Risk management encompasses everything, whether it is a market risk or credit risk or even operational risk. Operational risk covers even technology as well. Now coming to market risk, most of the elements which are external in nature but not being understood or leaving to be uncertain are emanating from the volatility in the economy. Majority of the things. Suppose we have seen in 2008, when the US economy and the European economy were in trouble, the side effects were felt in all the Asian countries, including ourselves. Wherever we are dependent on exports, wherever we are dependent on imports, then there is an impact, even though there was at that point of time enough demand domestically and enough manufacturing capability domestically. So we withered that particular impact of 2008 with respect to the economic impact on our country to a certain extent. However, in the last 3-4 years, if you have seen the kind of economic activity which is happening in a subdued manner is a very big contributory factor in terms of the risk. When he has given an example of corporate area, how long a corporate can wait to overcome the external factors? And if he is not able to, the problem is the impact is created not only on the corporate but also on the banks. The impact is very huge because the stake involved is very huge. In case of retail, in case of other segments, the critical mass being very less, the impact is limited. Whereas in corporate, it is very high. What bankers have resorted to as a matter of, you can say, overcoming mechanism has been to restructure genuinely with an expectation that after certain period of time, these problems would be overcome. But if the future still remains uncertain, it is once again a big issue. As such, macroeconomic factors are also very important factors which at times, because of the complexity wherein we are now moving through, if you look at in our country since 1992, we have slowly integrated with the global economy and now it is inseparable. Neither we can come back nor we can move forward. So if any impact occurs globally, that is definitely and immediately felt in our country. So in which case, more complexity is developing. So in order to ensure that these kind of challenges are overcome, if I come back to the same terminology, if there is a volatility, we need to have a vision to overcome the volatility and to predict as to what could happen beyond the unexpected areas. And if it is a uncertainty, we should have understanding of the uncertainty as to how we can tackle that in future. And if it is a complexity, we should have a clarity on such kind of complexity, how we can deal with. And if it is an ambiguity, very important factor for the banking currently or the financial sector currently is the agility. Agility is required because there are a lot of changes which are occurring. There are, economy-wise, if you look at, yes, there are a lot of changes. Risk management perspective is changing more and more. It is no longer a mathematical equation-related computation that the bankers have to comply to RBI and government requirements. We will have to apply to them to see as to how we are able to control the impact we are getting from the incidents which are occurring. So it is more challenging in the risk management environment than the technology environment. Technology environment, at least, you can insulate yourself by internally setting right the things, only waiting for the external factors where, if I give an example of Kashmir, problem, what is a Kashmir problem means, it's not a political problem, that geographical what has happened, all the banks were down for a longer duration of time, in spite of the fact that every bank was having DR setup. There's no meaning for the DR. Likewise, in Andhra Pradesh, Hudud has created tremendous impact, as a result of which, in that particular cluster, all the branches were down, customers were not able to undertake the banking transactions. Every bank says we have a wonderful DR setup. Then is it really meeting the expectations? Earlier, in the earlier years when you go back, even though there is a possibility of occurrence of such incidents, the probability was very less. Whereas now over a period of time, because the dependency on technology has increased and it is an irretrievable or irreversible situation, more and more such possibilities are happening. They are also creating large impact. It is a big challenge, and it is easy to identify the reasons and identify the complexities, but it is very difficult to overcome them. As such, it is a big challenge for the leadership. But one important factor is that currently the entire mechanism, whether it's a government or financial institutions, are clearly aware of the threats involved or threats emanating out of this particular unknown incidents, and every organization is taking steps in their own way, but it is a long way to go. We are still in a very nascent stage compared to the developed countries where US or UK or UAE who have taken the steps so far in this time. It's the beginning, and these kind of discussions or even forums, they will create more focus on this area so that we can take more steps in that direction. Thank you.
Thank you. One thing that I've noticed is, although the economy has been changing very rapidly and the conditions for business have been changing very rapidly, one thing that has been fairly predictable has been technology. Technology was more or less linear. You knew what to expect. New technologies that may come in. We all know that servers are getting more powerful. We all know that bandwidth costs are coming down. So there's a certain amount of predictability there. So the investments that have been made in technology, they are quite safe. But then, as customer adoption of technology increases, and the same technology is available to the crooks also, right? So how can we protect our customers from these unknowns in technology? Agnelo?
Yeah. Good afternoon, everybody. Like you rightly said, the more adoption of technology which is happening today, okay, and see, earlier days, like we could see the customer who's doing the transaction, the customer used to be in front of us. But today, with the adoption of technology and this kind of things, we really don't know who is behind the scenes. Okay, it appears to be like a customer is coming in to do the transaction, but it might as well be a fraudster. Okay. And I think what is happening today is that the banks are actually following behind the curve, if I may say so, because the fraudsters are coming up with new and new ways, innovative ways of committing frauds. So earlier it was phishing, and so there was a lot of awareness which the bank did about phishing, and the customers also started becoming aware. Then the fraudster moved on to wishing now. So now what we are seeing more and more is that the fraudsters are calling up customers and telling them that I'm from RBI or I'm from so and so bank and I need some information from you, and the customers are very willingly giving us this information which is leading to frauds. And no amount of awareness that you do is enough actually, and that is quite a big challenge that the banks are currently facing. Okay. Another big challenge and what we are seeing more and more is cybersecurity risk. Okay. We keep hearing about cybersecurity incidents very frequently now. And there are some large organizations who have been targeted, causing severe impact to the image of the organization, to the customer, and to the shareholder confidence. Okay, and this is really a big challenge for the banks as well, because the lot of investment has been made into technology, into the solutions. But what we are finding out is that those traditional technologies or the technology even that we have today are falling short of basically being able to detect this kind of advanced attacks, and just to put things in perspective, what has changed in the cyber security space over the last couple of years. So earlier, what used to happen was that the cyber criminals used to hack a system, get into a system, poke around, do some kind of thing over there, and get out. So there was no really focus. They were not really focused on what they wanted. Right, but today the cyber criminals are much more focused. They are much more organized. They have huge investments backing them. And because cyber risk or cyber frauds are being committed for a variety of different reasons. So it could be activism, it could be to destroy the competition, it could be for financial fraud, or it could also be political, which is or even state sponsored. So the complete threat landscape has completely changed, and a lot of organizations are still gearing up, or trying to come to basically basically understand what is happening in the environment and build those kind of solutions. So definitely from a technology point of view also, it's a big challenge that a lot of organizations are facing, banks also are facing. And so what is required now, or what is the need of the hour now, is basically for organizations to look at their cyber security preparedness. Okay, we should be able to realistically and accurately gauge our preparedness from a cyber security perspective, and then look at technologies and processes cutting across all business units, and to see how these processes can be applied to us. So that is it.
Okay, thank you. Asim, another question for you. As this kind of things happens, in fact, one of the things that is causing this VUCA or a perception of VUCA is, I don't know enough about the environment. I also don't know the consequences of the actions that I might take in response to something new that comes up. So, do you think there could be, say, think tanks? Earlier we used to have planning commission, maybe something else, which would constantly monitor the environment, some kind of a predictive analysis, and then give some guidance to the various actors in the economy? Is that a doable thing?
When you look to the Indian economy part of it, so there is Indian Economic Council. There is Economic Council which also supports the PMO office. So these are more structured, and they look primarily on the macroeconomic conditions, and if you can call it, it is more academic in nature. Now, if I compare this with the US market or the US economy, there we see a lot of collaborations between the lawmakers as well as the different players, both from banking area as well as technology. So there is a lot of convergence. Now, what we are seeing here as a trend, and that's important for the banks, because here the banking has been primarily driven by there is a demand, there is a need, but the supply has been less. So that's the way the banking has worked in India till now. But we are seeing a lot of disruptions, and the regulator, RBI, is also kind of trying to gear up for those things. And especially when you look at after passing the Payment and Settlement Act, and a lot of licenses were issued, and things are now picking up. So we are seeing tractions in that space, where regulator will also have to, collaborate more with the technology players as well as the bankers, how to do that. There are events which happen, like Indian IBA events, etc., which happen, but that is more looking from how do we service the customer, or what are the issues which are internally being faced by the banks. But the economic conditions, economic scenario, the uncertainty, the volatility. For example, if you take the falling price of crude oil. Now, For retail customer, it's good because it's going to reduce their EMI outflow, etc. But what are the implications for the customers, for the banks? Now, some of the exporters, will they get impacted? Possibly, because it is leading to stagflation, etc. in the European market. US is doing well, China is going down, Middle East is going down. So there is a correlation between all those things. Similarly, for the importers, it may be cheaper. So there are so many implications of this. And you can build as much as possible a statistical model, etc. But it requires a lot of thought process, not only coming from the bankers, but also from industry, etc. And that collaboration we don't see. Most of the time, bankers are always keep a distance from their customers in an open forum. So those kind of discussions are very much encouraged. Whereas in US, you will find a lot of interactions between them. There are think tanks which kind of come up with white paper, future-looking, forward-looking initiatives which they take to the lawmakers, and laws are made and they take pointers from that.
That's right. So the more a bank leader or banks are exposed to this kind of an environment, it also sharpens their ability to deal with this kind of uncertainties and look ahead with foresight and insight. The more information we have, the easier it becomes to handle. Fine. So from a macro perspective, it may be a good thing to develop systems where there's a lot of information is being shared for strengthening the processes so that we can deal with complexity and so on. But if I may give the example of an athlete constantly practices, constantly trains to build strength, right? So he has to constantly have that reserve of energy, reserve of stamina to take that, the last, I think they call it the second breath, all right, the last lap. So how do banks build this kind of muscle? How can banks build strength? One, financial strength. The second thing is management strength. How can they do that?
It's a very important question, and it has got a lot of ramifications, in fact. For a moment, if we can forget about the external factors, the important factor is to develop the leadership, to increase the strength of the organization, and to see that the continuity is there in the leadership. Now, strength of a bank, see, if I discuss with respect to the bank, strength of a bank is understood from its balance sheet. And balance sheet contains, more importantly, the capital. The capital, we have various guidelines, not only from Reserve Bank of India, even the Basel recommendations are there, which are adopted in our country, as a result of which a banker has to maintain certain element of capital. That capital is required not only for undertaking the business, but also to foresee what is expected to increase in the business. When I said capital, increase in capital or conservation in capital, whatever we call, considering the strength of the capital, my business outlook will depend upon that. Suppose I want to garner a business where the risk element is 150% or 160%, to that extent I am reduced or I am creating the charge on my capital. As a result, my risk management measures will have to be assessed and formulated in such a way that I am taking the less risk business in such a way that my capital is not impacted. So that is to precisely say from the risk management angle with respect to the capital, how I should maintain, how I should conserve. Having said that, every business organization has to progress. Progression comes by increasing the business. When I'm increasing the business, I need to foresee as to what should be my capital. For increasing the capital, either to take from the market or I need to increase internally by increasing my profit. Again, if I have to increase my profit, my asset liability management is an important factor. That means again it comes to the risk where what kind of clientele what I'm choosing, what kind of product I'm selling to them, and what kind of pricing I'm doing to the product. Whether all the banks can price the product as they like, once again there is a market which is going to define the price. If a banker is having more CASA, as a result of which their cost of deposit is less, they start with an advantage in giving a fine, refined pricing for their loan products. And a bank who doesn't have higher CASA, lower CASA, where the cost of deposit is very high, they are at a disadvantage. So all these factors are very important and critical factors when a leadership at an organization level has to develop the skills so that the organization objectives are met and strength is continuously maintained in the balance sheet while doing the business. It is the biggest challenge. For the sake of that, today, a lot of technology innovations, a lot of technology solutions are available to understand how the external factors are moving. Suppose a banker wishes to deploy the credit in a particular area. What is the result of the particular area when other banks have financed? Area, what I mean to say, a category of a segment. So all these factors are very important. Technology is available, knowledge is available, but we have to internally build the people who can understand the knowledge and who can apply the knowledge and who can take the informed decisions in such a way that the organization moves ahead, prospers well. Having said that, these are all the factors which can be controlled internally, which the bank has got a wonderful capital, they have got wonderful set of people who are managing the organization, but the credit deployment which has happened in the sectors, if they are not doing well, not because of their inefficiency, but because of the external factors, it again throws an enormous challenge on the financial sector. While it is, as I have said earlier, it is very easy to discuss and analyze the problems, it is always complex to overcome them, and no problem has a generic solution. Everything has to be dealt with specifically depending upon the situation. Now coming back to the question, what he has thrown in front of us is the capability to continue to enhance the strength or maintain the strength of an organization and also to enhance the skill set of the people in an organization is going to be the biggest challenge. Tools are available. There are organizations, there are institutes, there are skilled people who are coming and providing the guidance to the financial sector. It is a multi-pronged approach. Internally, we have to develop a system to improve the skill set of the people. Externally, we have to take the advice of the people who have got experience, acquired from global environment. With this kind of approach only, a leadership can mature and ensure that the organizations are moving efficiently.
Thank you. That was wonderful. That brings back again to my pet theory. So is this the time for India to build at least 4 or 5 too big to fail banks? Yeah.
There are now divergent view on this after the last recession. So the banks have become so big that they were not allowed to fail as a business decision. So whether you take JP Morgan Chase or Bank of America, etc., they were in dire need for capital, and somehow through quantitative easing, the Fed supported them. So now they have becoming systemic risky bank, and that exercise has been going on in the European market also. There were strong lobbying from these banks against the Volcker rule, which was coming in to bifurcate a lot of their businesses and also their trading books, because they were doing trading with customers' money and taking risk in the market. So those things were going on in there. Now when we look at the Indian market, so there in the global market, these are all global banks, well established, have been doing business. They have failed at times in some parts of their businesses, etc. They have been penalized for doing wrong business also, and the total penalty, if you close it, it's almost approximately more than $50-60 billion, and which is a huge amount, all the banks combined together. But when we look at the Indian environment, and this RBI has been mulling, and a lot of finance ministers have been discussing that we need to create some large bank and which should be comparable to the global banks, etc. But is there a need for it? I have my doubts on that. Yes, there are inefficiencies in some of the banks on the mid-size or the banks, and they require more efficient leadership, which Mr. Rao has been very clearly articulating. And there is a big challenge for all these banks, that lack of second tier. There people have been retiring, etc., and the new crop is not joining the banking business in the public sector. So that's a major practical challenges, and that efficiency is the focus. But merging the banks and creating a global or too large to fail a bank is not the solution that we believe out here. But Ministry of Finance has a different opinion on this, and discussions are going on. My proposition is that it's more on the processes, improvement and efficiency, and creating the leadership in these banks. Because when you look at the examples, also in US, every year approximately 30-40 banks fail. Each state, to their area, they have hundreds of local banks which are running profitably and servicing their customer needs specific to that particular region, that particular business, etc. in that localized area. So when we look at that perspective, it's a complete different scenario. It's more driven by the business needs. But where here, we are still regulated. A lot of these things are regulatory driven, and banking leadership needs some freedom to take decisions which are business in nature. So that is something which the regulator and the government has to kind of focus on to providing them.
Yeah, but okay, so even if merging into big banks is still some time away, how easy is it for two banks to merge at the system level and in a matter of technology? I know your bank is preparing to merge with another bank.
Yeah.
So can you tell us how easy is it?
Yeah. I think the technology comes second. I think more than that, first is basically to merge or basically get both the banks, the people together. Okay, and I think that itself is a big challenge in itself, because the way the banks operate, and they could be different in their processes, the technologies that they use, and how they operate. So getting the people to work together is the first big challenge, I think, which is there. And there are a lot of because apprehension in the people's mind, because there's duplication everywhere, and then people are afraid of losing their jobs, and those kind of things are there. Apart from that, again, the technology decision also is quite challenging, and I think a lot of focus needs to be put in over there, because on both sides, what happens is that each bank feels that the technology that they are using is better, and is serving the purpose that is required. And so maybe on one side, the bank would say that my technology is the best, there has been no downtime for the last so many years, and it is being used perfectly well and everything like that, and the same things happen on the other side as well. So I think it's quite a challenge, but I think the leadership is well geared to take up this challenge and get both the banks working together on a common platform and use the best technology that is good for the customers and for the bank as a whole.
Thank you. Sorry.
Just add one thing out here, because I have been part of one of the large integration in the UK market. If it is an acquisition, a big brother acquiring a small brother, no problem. But if it is a merger of equals, trust me, it never merges. So much of politics, it's not about technology, it's not about processes, not about products or services. It's all about politics, and politics. That's the biggest problem I have experienced. 2 years, every day, every night, so many meetings, but most of it used to result, how do I leverage or, kind of hog the limelight or build all relations or all decisions around me. And that's the biggest challenge. So if there is an acquisition, if government forces a larger bank to acquire a smaller bank, that will be smooth. No challenge on that. Technology is quite mature on both sides of it. Processes, etc. also can align. But if it is going to be a mergers of the equal, we are going to see challenges in that.
Okay, thank you. I think we'll throw the floor open for a couple of questions. Somebody give a mic there, please.
I pick up this question from the last statement made. A large bank merging with a large bank. What happens if a large bank is split into pieces and merged with a larger bank?
Okay. So I will give you an example. So Lloyd TSB Bank acquired Halifax Bank of Scotland. And then after 3 years, they sold off certain of their assets, or they demerged that. So it's a cycle. So it's a challenge. On the demerger side also it's a challenge. But on the acquisition side, it's a larger challenge. Because in demerger, I can sell it off at a discount. You can take ABN AMRO sell-off when two banks acquired it. So that's a very different proposition. But on the acquisition side of it, it's a big, big challenge if the two parties are equal.
Yeah. Good evening, sir. I noticed Mr. Agnelo focusing a lot on cyber criminals and hacking and external threats. So what I wanted to understand was what kind of measures are being taken by the banks when it comes to internal threats. That is, you have many layers of admins, super admins, privileged users who are to whom the data of the customer is pretty much in their hands. For example, if we take the case of Snowden, he was an internal employee who brought about such a radical change. So I just wanted to understand what kind of measures are being undertaken to take care of such internal threats. So probably Mr. Agnelo and Mr. Mallikarjun Rao can throw some light on that.
Yeah. From an internal threat perspective, I think there is a lot of action which the banks are taking, and a lot of solutions are actually implemented, and they continue to be evaluated and implemented. So when you talk about the super admin access or the super user access, so we have systems where basically you have recordings of all the activities that are done by the super user, which are reviewed periodically, and whenever there is a requirement to do a forensics kind of thing. And also every new system that goes into production, basically, so we see to it that they have all the controls properly put in, like for example, maker-checker controls are in place, and straight through processing is there. So there is minimum usage of in the sense there is no manual intervention in the processes, and try to make it straight through as far as possible. So those kind of controls we keep evaluating and we keep putting in place, so there are various solutions that we put in place. So what we do is basically we build a heat map and look at the overall risk from all angles, and look at what kind of incidents are happening, and try to then build on that and put in innovative solutions to address this kind of risk.
I'd like to continue what Mr. D'Souza has said. It's a wonderful question, because any threat, whether it is internal or external, cannot be controlled exclusively by technology. It has to be combined with operational control, role clarity, and effective implementation on a continuum basis. It is not like a one-time achievement. These are the important factors. Now I'll give an example. For an external control, if you have seen in the last 10 years, from 2010, 2011 onwards, there was a maturity in net banking usage by the customers in our country, which has also opened opportunity for the phishing attacks. So 2011, 2010, 2011, 2012 up to a certain extent, there were a lot of phishing attacks whereby customers have lost money, in spite of the fact that the technology implemented as on the date, there were no chinks. So there was a requirement of operational control to be coupled with the technology. As a result of which, the concept of second factor authentication put forth by Reserve Bank of India and also OTP has come into picture in such a way that now technology and operational control both are taking care to minimize such kind of risk. That was one area. This is an external threat. Even computer terminology you call, if your password, your login and password are entered in your laptop or in your PC, a keylogger can copy them and send it to a direction where it is required. And accordingly, the culprit can perpetrate the create a loss on the customer. Now, in the last 3-4 years, there has been some element of maturity in that area by creating the controls. Now, coming back to the internal threat is not new or is not the one which has stopped as on today. It was there, it has been there since time immemorial. The only question is, when the technology was not part of the banking industry, there were operational controls, there was a role clarity, and there was a monitoring mechanism as to understand the internal staff, whether they are properly undertaking their activities. Procedures were there. Infringement of procedure was dealt with sternly. The punishment was given to them, not with an objective of sadistic pleasure, but with an objective of a deterrent that the others do not commit such kind of mistakes. Over a period of time, with the increase in implementation of technology, internal threats have also increased. Earlier, it was very easy to identify the threat and it was easy to understand who was the person who has perpetrated. Whereas today, it is very difficult. As you rightly said, even passing of an information unknowingly or knowingly, understanding that it doesn't carry any financial threat, can ultimately create a financial threat. Somebody can call you and say that, look, I'm speaking from bank, and this is the kind of number you have, and am I speaking to such and such guy? You have to do this. How could he have certain amount of information initially to create a trust on you and extract certain information from you? There could be a possibility that internal pilferage could have led to this. It is a big challenge currently because of the technology which has developed over a period of time, but all the financial institutions are clearly aware of this threat, and this threat is being overcome. I don't say totally eradicated. They are overcome by way of clear role definement and monitoring as to whether he is working within the role what is defined to him or not. Now, as far as the roles, what you asked in your question with respect to super user, user, all these are all layers created by us for undertaking certain activities. And those activities, if they are monitored closely with vis-a-vis as to what is required by them and what they are doing, I am sure this can be controlled. It is a continuous activity. It is as good as a regular management to be undertaken by the organization. Thank you.
Yes, madam.
Yeah, I have a question. See, all along we have grown up hearing. Hello, can you hear me now? Yeah. We have grown up under the advice that make it simple, keep it simple. But then off late I've been getting advice within quotes, make it complex. We were working on this enterprise level, enterprise-wide loyalty rewards point scheme. I was advised, make it complex. Then we were working on some charges to be recovered from customers. I was again advised, make it complex. Why? Two examples, at least two examples I'll mention here. One example given was like interchange in case of e-commerce transactions. The rules have been framed by Master and Visa. I mean, everybody knows you have to do a 1 week course. For that again, Master or Visa charge money, for that course. To understand what are the charges they recover from the banks or from the other stakeholders. That was one. Secondly, my own experience, in one of the banks I am holding an account, they charged me some 250 rupees in my account. And I asked them on their CMS system, why have you charged me this amount? The logic given was such a long letter because in the last month you withdrew this thing, and then you went to this ATM, then your balance on that particular day had come below 10,000, something. I said, damn it, 250 rupees gone or gone. I'm not going to spend my 250 minutes to read this logic. So, I mean, making complex worked for that particular bank. So with these kind of examples, I seek opinion of panels. Where should the bank, it is beneficial for the banks to keep it simple, and where to make it complex and enjoy life?
Can I take that? You take that. Okay, so let me take that because here people are bankers, so I am I am also a slight one. So let me answer that part of it. So there are two sets of bank in India. I am just taking the Indian context. One, which makes things complex, and I think you would have interacted with one of them. And they are more innovative in applying charges, applying fees, and keep on increasing their fee income. So you will see that. The balance sheet will also reflect that aspect of it. And if you interact with them and communicate, you will at least have to do 7, 8 interaction, and then as a retail customer against a big bank, you will just leave it at that. So that is something which we are seeing it. Now, there is another group of bank which are very lax. The genuine charges also they don't apply. At times they miss that also. So there is an extreme when you look at the spectrum of it. Okay. So there, one which is very aggressive, which has defined complex charge modules on all their products and services, not only credit card, on other also, whether minimum monthly balance, average quarterly balance, everything they are kind of closely monitoring it to increase on their profitability part of it. What is going to happen is that slowly when we are seeing more players coming into this space, or it will just become like Amazon. Somebody will come, some of all these basic needs of you, which is driven by payments. Because at the end of it, why do we go to bank? One, if I need money for loans. That is something which is a relationship. Otherwise, rest all is fund transfer. Rest all is money transfer. That's it. I buy something, I pay. I send something. So that's the whole idea. So you will see lot of disruptions on the payment side of it. And you can adopt multiple channels, multiple instruments which will slowly move away from the bank. And this is going to happen. And this is something whether you take Uber or any of these players coming in, these are all non-traditional players. On the loan side of it, still some of them who are going to be more responsive to you, you will have relationship or you will keep shifting of that. So earlier session was on loyalty and reward, etc. People are now waking up to that. They are going to consumer case codes. So things are shaping up, but for customer it is still a long battle.
Yeah, I have a small question here, sir.
Okay.
Yeah, I'm Rohit Shukla from IDBI Bank, but I'm not in the retail banking line. So I just had a curiosity, if I could call it that. Over the years, you see, our checkbooks have always remained the mainstay of banking transactions. Even till today, we are gradually moving to technology. Why I'm asking this question today is that we have some elite forum from the technology front as well. So maybe one can ask this question to you. Even today, the only single unique identifiable aspect of a checkbook is the signature of the customer. Unfortunately, as of today, I haven't found in many checkbooks where there is a second cross-checking or identification device on a check. I mean, as a layman, one could instantly say, let it be a photo checkbook, at least a small photograph of the actual holder of the checkbook is on the check, and the person who's in the branch, he can at least verify that much without having very expert training. So if technology could, introduce something in checkbooks, because this is something many banking frauds are accruing out of forged signatures, duplicate checkbooks. It's not difficult to print a checkbook. So we strongly feel that there have to be one or two more features in a check which can be cross-checked just besides the signature, or which can be forged in any case. So I just thought if you can have your thoughts on that.
Hello. The first factor is that checks have been in use for quite a long time. They were being used extensively, but because of the technology, now the usage is coming down. Forged aspects were there earlier, even though they are there today. Now, what we are looking at is, with the development in technology, is there any way we can create, that's what your question is there any way we can create another factor of authenticity, whereby when the check is being passed, not merely based on the signature, but another factor is required. I tell you, even signature also is verified manually. Is there any technology which can give 100% result by indicating that the signature available on the check, which is captured in an image in the CTS mechanism, to indicate that it is tallied? No. Even now, signature is verified manually. Even though technology has improved, operational difficulties and the geographical barriers and also the time taken for certain activities are overcome, reduced with the implementation of technology. But the original factor in verifying a check and passing a check still remains the same which was earlier. Now, is there any possibility? That is the question, whether we can introduce anything, new element. See, so long as the check, if it is a forged instrument, if the instrument is coming and presented into the same account, but signature is forged, the only way to identify is verifying the signature, and there is no other way at this point of time. If it is used for a different account, by way of a check being taken, just like that of a loose leaf check, and hitting a different account, systems are there to stop that. Even in CTS, it is taking care that if the mismatch is there with respect to the check number, check serial number, account number, other things, it can throw it. But such kind of incidents are very few. Major incidents are only this. I don't think any technology is there. Even OCR technology has come, optical character recognition. Even that cannot assure us 100% matching. Because the problem is, if the system says it is matching and the check is passed, and in reality, if the check proves to be a forged one, the person who has passed is responsible for having taken a decision of passing the instrument. I'm really perplexed to understand, to see whether any technology can improve. But one important factor you keep it in mind, over a period of time, because of the technology, usage of check is coming down. Even NI Act was amended for a material alteration. Now CTS doesn't accept. Earlier it was being accepted. So there are various operational conditions which are being enhanced to ensure that check passage becomes more accurate and fraudulent activities are reduced. But I bet on maybe in another next 4 to 5 years to come, there would not be usage of check in a larger extent. NEFT and RTGS in the last 3-4 years have improved a lot. There are a lot of transactions taking place. If you look at 3-4 months back, RBI governor has indicated that if they can create a mechanism for settlement of the receivables of the MSE customers, they would not depend on checks. Today, even now, check is being used only because it is a trust for them. From the customer, they obtain the check, keep it with them, and they present after some point of time with the confidence that the check will be passed and they can realize their receivables in the MSME industry. So, if any other mechanism in the payment settlement arena, if it comes, which can smoothen the process, the dependency on check can be reduced to a greater extent.
Yeah, just to add to that, you can watch a movie which is Catch Me If You Can, by Leonardo DiCaprio, and it has all the cases which FBI has done for check forgery in US, and the gentleman who was a fraud joined FBI to discover all these check frauds.
So thank you very much. Before banks start charging us for breathing in the ATM booths, I think we need to stop here. Thank you very much.
Thank you very much.